The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful Money Masters and Treasure Hunters. Welcome to the February 26th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and grateful for your presence here today. And my outcome, as always, is to help you to become a better Money Master and to provide you with the tools that empower human potential. Because living up to your potential, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call the human spirit. Now, you know, we've all heard about people who've exploded beyond the limitations of their conditions. These are the folks that become examples of that unlimited power of the human spirit, folks. And you and I, we can make our lives one of these legendary inspirations as well. All we need is the courage and the awareness that we can control what happens in our lives. Yes, we cannot always control the events in our lives, but we can control our response to those events and the actions that we take. And that's real key, folks. This is the key. Control what you can control. Your actions, oftentimes what I call massive action, is really what it's all about. If there's anything, folks, in your life that you're not happy with, make a decision right now about how you're going to change it. There is no time like the present, because that, folks, is the gift of the human spirit. Let's go take a look at the human spirit of the markets here right now. We've got the Dow up 104 points out there. The S&P up 7.5 at 1495. NASDAQ Composite up $12.45 out at 31.28. Russell 2000 has woken up. It's up 5 points, trading out at 900.90. NASDAQ 100 up at 10 points, up at 27.11. The transport's up $9 right now. And the OEX, the S&P 100, up $3.76 across the globe here. We got the DAX trading off 1.5%, down 115 points right now. The FTSE off 68. That's off a percentage point over in Asia last night. They took a little smoking. The Nikkei down 2.25%, off 2.75%, out at down 263 points. The Hang Seng off 300 points, down 1 3/10%, and the Shanghai off 34 points, out at down 1 4/10%. Our call number is always 877-927-6648. We'd love to hear from you. Give us a call. We can take a look at your stock chart or anything else that you'd like. If you are listening on the radio or your mobile device at TFNN.MOBI, thanks so much for doing that. Remember, the live stream of this show can also be obtained on your smartphone. Just go to that homepage of TFNN.com. Click on the little button over on the right-hand side. You'll see 3 smartphones. Click on that. This show will stream live to you. If you'd like to see this show in HD, go join our Tiger's Den. You can do that for 30 days unconditionally. Go out there, sign up for the Tiger's Den, a great group of traders, investors inside there, always offering great information and tools. Well, let's start in here by taking a look at the Dow. We've got Uncle Ben Bernanke. He will be testifying here in the upcoming minutes or what have you. And as we take a look at the Dow, folks, do not get sucked in on this little bounce here in the marketplace. If anything, what you want to do is you want to find your spot, whatever that spot might be, where you might take a look at a short position, or might not be a bad place to, I would say, maybe start moving to cash out here. With the markets being so close to their highs, and you have to take a look at the longer-term chart, you have to start asking yourself this question: why would I risk all of the gains that I've gotten back? Why would I risk what should be maybe a small amount of potential for a large amount of risk? Let the market break. If the market's going to break out, let it break out. Let it get up over resistance, and then you would want to come back into the marketplace. Now, of course, it depends on what your 401ks are really invested in. Many of you, it's really just an index. So that's why when I talk about this, I'm really referring to especially those folks that your funds are tied to an index, whether it's the S&P, it's large caps, whatever it might be. And we'll take a look at some of those longer-term stock charts out there, just to be able to take a look at the reward to risk that you should be paying attention to. Now, we're going to start off by taking a look at the daily charts, though. Let's take a look at the daily chart here of the Dow Jones, because that actually has been pretty strong out here. When I say pretty strong, it has been the index that has been traveling sideways. It has been consolidating, off of, we're going to use the bottom of the consolidation, really use the January 31st low or the December 1st low. Doesn't really matter. That price point is at 13,860. So I'm going to blow this up on my screen. Might be a little bit easier for you to see if you're following along. So this little horizontal line, this is a horizontal line, consolidation area, and we can see that the Dow really has been traveling. Yesterday was the first day that it really pierced that area. Pierced it, closed below it. I say today's trading session will be telling. The Dow here is trying to get up inside there. However, if you get it closed below that 13,860 level, all it will have done is it will have tried to get back into, an area that was support, and will have rejected. If it gets back in there, then it sets up that opportunity of a little bit larger bounce inside the Dow, and we know that the upside resistance area ends up being the high of February 1st out there, 14,019. There was a trading session where really it closed above that area. That trading session was the day of February the 19th. You did get a slightly higher close into that area on February 12th. Wasn't a lot of conviction behind that move as it closed out at 14,018.70. That was going against 14,019.78. Oh, I guess it did not close above that. Oh, okay. How about that, Steve-O? Now, so you did get some conviction yesterday. If we take a look at today's candle, so far not a bullish reversal candle. If it gets back into if it closes, I would say anywhere above 13,911 or higher, that would create a piercing candle out there, and it is a bullish reversal signal, but you'd want to go take a look and see what's going on inside the diamonds. Take a look at volume out here. Let's do that right now. Volume yesterday to the downside, big time. Volume, that's volume off the top right there. However, it did make a high. So the diamonds did make a high yesterday. Let's pay it its due. Made a high of 140.59. You could call this either a high volume high or volume off of the top. Right now, while the diamonds are trading inside there, it does set up a possibility of that test of 140.59. But if you take a look at volume, though, 10 million shares, and certainly we know that volume really came in at 10:30 to go down into the intraday charts. Start taking a look at it. We know that all the volume was pushing to the downside out there. So I don't think that the diamonds will, on this run here, actually get all the way back up there. It is the strongest of the indexes, though, for you to be paying attention to, in my opinion, out there. So today's candle, so far in the Dow Diamonds, nothing out there. Just pay attention really to the volume. So far in the first 44 minutes of trading, 2 million shares. That is going against the 10 million shares yesterday to the downside. Let's go take a look at the S&P 500. Let's go see what that is doing. Then, maybe after one of the breaks, we'll go take a look at the longer-term charts out here. And when I mean longer-term, the monthly charts, the weekly charts out here. As we take a look at the S&P 500, I think the first place where the S&P is going to head to is the bottom of that rising price channel out here. Again, that price channel, if you are just listening to us on the air or at tfnn.mobi, what I've identified here is a price channel. We've got three co-located opens and closes. The first one being the open session from November 16th, that price in the S&P 500 being 1353.36. Then you've got a close of the session of December 28th, as well as the open on December the 31st out there. That sets up the bottom. Where's the price point on here? It's probably somewhere right around the 1479 area, 1474.51. In fact, we'll draw that line across the screen because this is going to be the area that's going to release on the S&P 500. We'll release the most amount of information for us. If we draw this, so you got the rising price channel in here. You can see what I've set up here for the top of that rising price channel is really all of the co-located opens and or closes right from the January 25th level on. So as we take a look at that rising price channel, we can see here we've got a little X marks the spot right here. The actual day that it comes in looks like it is March the 1st. So right around March the 1st out here. I don't even know if March the 1st is an actual trading day, but let's go take a look at the calendar and see what day March 1st is. It is Monday. So next Monday, maybe it would be Friday, and these X marks the spots. I'm not you can't really use this from a day standpoint, but it would be interesting. It'll be interesting. We'll keep this stock chart out here. It'll be interesting for us to come back to it and take a look. But what we can see is where X marks the spot, we're looking at horizontal support. That would be the September 14th swing point that the S&P broke out above, has not come back to test it. Once you break an area of resistance, any market should come back and test that area. So that'll be a breakout area. And we can see that also happens to be where you've got the rising trend, rising price channel out there. Now, when that area breaks, what that sets up, it sets up very simply a run for the next swing point low. And that swing point low is none other than December 31st. I suspect that is where the S&P wants to get down to. First is going to have to crack that January 2nd high, but anywhere between 1398 is quite a distance out there when you stitch those two candles together, 1398 to 1462, and you'll just be paying attention to maybe the relative strength indicator, maybe it's going to just simply be volume, but that is where it looks like to me the S&P wants to head to. If we go into the ETFs, let's go take a look at the SPYs out here. As we take a look at the SPYs, let's look at the volume comparison between yesterday and today. Certainly no more than just a timeout harami candle here inside the SPY. That's what today's candle is. That is nothing more than a timeout session here. It's a bull harami, but that is not a reversal signal at all. Yesterday's volume, this is volume off the top for sure. That in the SPYs, you're looking at 245 million shares to the downside. That's after Friday's session, going up with 106 million shares out there. So far, in the first 48 minutes of trading, 44 million shares today. And that is on our SPYs. The SPYs will move down into the first place they'll head to is going to be the low of January 2nd. And that is 144.73. That will be the gap up from January 2nd. That'll be the first area where we'll see we'll see what kind of support it can find. Volume as it moves back there is 191 million shares. So that is on our SPYs. Let's go take a look at see what the next index is that pops up on my screen here. Oh, let's take a look at the New York Stock Exchange. We haven't done this here for a while. New York Stock Exchange, what a beautiful stock, what a beautiful chart for patterns out here. You've got two 1.618 butterfly patterns that completed right in the 9,007 level. We actually had the New York Stock Exchange move to a slightly higher high on February 19th, gets up to 9,004, 9,007. Remember, that is the high of that would be the completion of the larger 1.618 butterfly. In the case of New York Stock Exchange, it had two 1.618 butterfly, significant reversals, other reasons for this to have moved down to give you an indication that it did not have the strength to continue moving higher. Right now, you'll see a line drawn across my screen here. That is the low of August 16th, 2007. That is the swing point out there that for 200 years, a whole set of celestial patterns that were out there had always marked lows in the marketplace, and that didn't hold. Right now, trading back below that area, if you were going to take a look at the New York Stock Exchange, it says you're still in a bear market. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow up 80 points right now. S&P up 4. Little relief rally underway here. NASDAQ up 4 points. Russell up 1.5 points. And let's go start off. Let's take a look at the monthly chart here of the New York Stock Exchange. Now, as you take a look at this monthly chart, if you're watching us on Tiger TV, if you're listening on the radio, maybe go listen to the archive of this show, which is on Channel 10 here. If you were listening in the early part of February, right around the 14th, the 12th of February, what I've got marked on my screen here are a set of planetary conjunctions that occur inside a 1 week time period. It's very unusual to see sets of 4 or 5 or more that occur during a 1 week time period. And so, I maybe don't know. I've gone ahead. I'm always intrigued about the markets, and maybe like yourself, always looking for different clues out there. Is there some aspect about the market that would give me a advantage, a competitive advantage, an indication of something that you should be aware of? And, that's what I got the opportunity to do, quite frankly, last Wednesday. In that 1 hour workshop, I shared what I believe is truly some of my finest work, and actually got a chance to do it this weekend as I spent time with one of my daughters up in Gainesville. And it was really great to be able to put something together visually. In fact, something that folks hadn't really seen before out there, and so that was a beautiful thing. Well, what you're looking at on my screen here happens to be a couple different periods, sets of planetary aspects of conjunctions that all come together. There was one back in 2000. And in 2000, went from August 13th to the 17th. We had 5 conjunctions that took place during that time period. Also happened to be a planetary index date, a 14 planetary index date, a Pesavento date, which is a beautiful thing. And that low in August 16th is the actual day. We're looking at a monthly chart out here. That was a low that had not been broken for 200 years based upon a setup of cycles that were out there. Once that low was broken, actually signaled the beginning of the bear market. And obviously what we've had here is one heck of a nice bounce. We've had what looks to amount to about a 0.786 retracement and a move up into that August time period. Right now, the exact 0.786 retracement would have been 9,059. What it actually got up to was 9,004, as we were looking at on the daily chart. Now, what's interestingly enough here is that through February 12th, between February 4th and February 12th, we had 5 of these conjunctions that took place out here. The last set that we had back in the 2011 time frame happened to occur back in February of 2012, also February 14th through the 19th. There were 4 conjunctions out there. That high ended up being a high for quite a while, for several months. In fact, the market went ahead and made a low going into the June time frame. That was that June 4th low out there. We had another set that came in 2011. 2 sets actually kind of back-to-back. One was in March 27th through April 3rd out there. The market did move just slightly higher before it went down, and it made its lows that went back into the October of 2011 time frame. So do you believe that these patterns might have something to do with the marketplace, or maybe identify market highs or lows? Anyways, that is the market out here. That is a 0.786 retracement. The New York Stock Exchange, truly the better breadth of what is going on in the market, way better than the Dow 30 stocks, and a heck of a lot better than the S&P 500 stocks that are out there, because this is the breadth of the marketplace. And that's why we should always be paying attention to the New York Stock Exchange and get some type of signals out there. Let's go take a look at the Russell 2000. Let's switch over, go back to our daily indexes out here. Let's take a look at the Russell 2000. We know that has been a weak link here. That was the weakest link here yesterday. Not showing any kind of strength today. Today, right now, creating a little bullish harami. It's nothing more than a timeout candle. It is what you would expect. The Russell 2000, which has been some real strength out here, I'm going to go ahead and actually just get rid of the 1.618 butterfly out here, and we're going to take a look at from the swing point lows. Actually, don't have the right. Let's take a look at a couple of different things. Let's take a look at the retracement just simply coming off of November 16th low. So let's come off of November 16th low all the way to the high that was put in on February 19th. Dead cat bounce takes you into that January 2nd candle. That would be 867.65. More likely, like everything else, like the markets, they should pull back to the breakout area. That breakout area, none other than December 31st. That would be the lows at 831.18. At 827.90 happens to be sweet 618, the 618 retracement on the Russell 2000. That is where she is headed to. For those of you that were listening on yesterday's show, and as the market was moving higher, I said if you're going to short something, if you're going to take a short position, do it in the Russell 2000. You should be celebrating after yesterday's move down. 877-927-6648. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 52 points. S&P just up about 40 cents right now. Otherwise, the rest of the indexes have gone red. Not sure what Uncle Ben is saying, but the market not digging whatever it is he's saying. Let's go out to John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm fine. Thanks for taking the call, sir.
My pleasure as always. My pleasure as always. How can I help you?
Yeah, I wanted to tell you I signed up for your service, and I found that webinar you did last week during the evening real helpful, and I do commend you. The amount of stones you look under is pretty damn extensive, Steve. I don't know how you do it.
Oh, thank you very much. You know, it's a lot of fun. You know, when you and I was really when I was with my daughter this weekend. You know, she's in college. She's in her junior year in college up there. Of course, my question to her was, "How you doing on your dream? And what is your dream out there?" And I said, you know, I've really had the benefit. I don't know, instinctively, the things that I've always done in my life for the most part, you know, were these dreams. And I may work a heck of a lot, but I told her I don't ever feel like I've ever worked. You know, when you do what you love, you know, when you find your passion, you just can't get enough of it. You know, this morning, you know, I woke, I felt rested. I was up at 4 o'clock, and so I would just rather get up and read or do something or take a look or learn something out there. I find so much. And you take a look at the work that you do and what you provide to folks in the den. You really are. You're the one that should really be commended. For all that you do as well. And I just, when you must experience the same thing. I know that you work extremely hard at it, and what's really cool about, for those folks that don't know John, and I don't know John personally, I don't need to. I know enough about John just simply because of the actions that he takes. And I know he subscribes to that theory. If you're not giving, you're not living, because he is always giving out the trades that he has entered into, right, wrong, and different, no matter how they turn out, inside the den. And that's a real commendable and thing to do. So I love doing it. And what we did last week on Wednesday, didn't matter what level of trading that you were at, such a set of cool tools to be able to use out there. So I appreciate you for even joining in.
Steve, my question for the day is this. It's a follow-up to data you just presented.
Yes.
You showed a chart in the past 15 minutes on the New York Stock Exchange monthly in which you just listed, I believe, which referred to as clusters of planetary conjunctions or something.
Yes, correct.
And my question is this. I just made a printout as you were doing that, so I'm looking at the chart that you placed. And I see you reference, 1, 2, 3, 4. I see 5 planetary conjunctions occurring here in 2013 between the dates of February 4th and then February 12th. So that's the data that I'm looking at. So the question is this. This set of data where you've presented points in time in which there were apparently clusters
yes.
of planetary conjunctions. My question is this data exactly or somehow related to what I've seen Larry Pesavento share from time to time, where he will occasionally show a transit chart for a date in time that looks all messy, and he says, hey, this is significant?
The transit charts are different from what it is that than what it is that I'm showing. So two different things, because in those transit charts, you're taking a look at a number of planetary alignments that are all in a certain house, if you will. And so it's different than taking a look at this little cluster of conjunctions. So two separate things out there. And really it was, it was Larry's original work that led me on to this. It was, like I said, I love learning about the markets. And so, Larry's got some great books out there. I think he's written probably 8 or 9 books. I've got each of them. And a couple of them dealt with taking a look at the solar system, the celestial system, the lunar system, and different things that occurred out there. And one of the things that always intrigued me was being able to identify significant market tops or bottoms, or any type of market top or bottom. Whether it's significant, you really don't know until it really plays out in the end. And so what I did, John, was I went and I paid somebody to digitize the entire ephemeris. So I've got 300 years worth of data out there, and I was able to go back and then be able to take out certain aspects that others have done the work on that identified typically market turns, and then I was able to electronically just lay them over on charts out there. And so these clusters of conjunctions are very important to pay attention to. Now, in 2013, we have several series, so it's a very active year. I don't know what that means. I just know it's important to plot on the chart. We've got another set that takes place between March 4th and the 8th, and then one set after that finishes out 2013 between March the 22nd and March 29th out there. So they're just and I think it's that set, the March 22nd to 29th, that may end up being the one that has the most meaning behind it. And the reason that I say that is because you've got a Venus-Uranus aspect out there, Mars-Uranus aspect out there. So, but we'll just have to play it, one thing at a time. And if you take a look back in Larry's books, John, what he talks about is before the crash of 87, I'm not predicting there's a crash here. I'm just predicting it's important to know these points. But one of the things that existed back in 87 was a series of 6 planetary conjunctions. So between August 19th and August 25th of 1987, before the crash occurred, there was this set of planetary conjunctions. Now, the cool thing, and what I did was with this weekend with my daughter, because we took up I showed her the same tools that I shared on Wednesday. And you have to understand, she's really never looked at a stock chart. She's looked over my shoulders from time to time. But I said, let me show you this. Let me show you this visually to see if you could pick up on it. And she was able to pick up on it really quickly. That goes to her intelligence, not my ability to communicate. And so then we went back in the stock charts, and I said, look, just do an internet search for all the different market crashes that have occurred out there, or big changes in markets. We can just look at the stock chart and identify it. And I said, go take a look at this pattern that's out there. What I found interesting, I went through the whole process here where I said, I went down the process of taking a look at what was going on in the skies, whether it was full moons, new moons, Venus-Uranus aspects, or a set of conjunctions out there. And what I found was it was simpler than that. Just simply utilizing the tools that I shared on last Wednesday helped you to identify those spots before they happen. So it was just an easier way to do it than having to worry about all of this stuff that's out there. So I don't know if that. So it's different than Larry's transit charts that are out there for sure. Totally different.
Steve, you gave me your detailed answer was just what I was looking for. So thank you. My one last question. As I'm looking at that data, I also see you had labeled a number of dates, and it just was a couple where I think I read Pesavento index, P-index dates.
Yes.
And the question is, the clusters of conjunctions that you have listed here, are those related or inputs to Larry's construction of the P-index dates? And also, this chart that I'm looking at here that you just showed in the den, is that the complete list of P-index dates or not?
No, it is not the complete list of P-index dates. I do have some other charts that take a look at that overlay all the different P-index dates. Now, what I usually do, John, is I will take a look at P-index dates where there's only 2 planets that are in alignment on the ephemeris during that time period, or maybe 3 or 4, and then 16, 17, 18, like that. What I have identified here on the monthly chart just happens to be areas of support where the market created an area of support. And I just simply went back. Now, what you see on the chart, for example, September 23rd and 24th of 2009 happened to be a back-to-back set of P-index dates, a 2 planetary index date and a 14 planetary index date. It's unusual to have back-to-backs. So it's also interesting to note that became an area of support out there.
I see. I got it. Yeah.
Yeah. And then we had another. And then, as the market pulled back and tested that area, gave you a bullish engulfing. That was a real strong sign out there. Had nothing to do with anything other than just the candle formation on the monthly chart. However, the following month, August 25th and August 26th of 2010 was also a back-to-back planetary index date, a 3 and a 16 out there, and that area held as support as well. And we can see as the market moved down in October of 2011, that area, for whatever reason, held as a support zone out there. So I just simply, do the work, and I keep things notated on the chart just to remind me also of what happened and maybe what to look for in the future and where support is.
I see the significance of that. So great. Listen, I know it took a long time to lay all that out, but I do appreciate it, sir.
Well, look, no problem. My pleasure to do that. If we take a look at, I don't know if I've got it up here on the screen. I guess I don't have it up on the screen here. But what I did is I took Larry. It was Larry and Dr. Ruth Miller that did the original work, and I took their work and then was able to go back and so I took a look at 300,000+ days to just simply identify what the standard deviation in essence was with regard to these planetary index dates when the anomalies occurred. And then because I've got all of it digitized, it's easy for me to just go ahead and print out what that is. So that's always included in each newsletter just to make people aware of of those dates. Do they always work? Absolutely not. The idea is when you're taking a look at any type of, in my opinion, in taking a look at thousands of charts out here, that your priority is always the pattern that's in place. An A to B equals CD pattern, and when those things line up with some other maybe celestial or lunar aspect out there, that's when they have the most amount of power.
Steve, thanks so much. I do appreciate it.
You bet, and thanks so much for calling. And appreciate all the kind comments. Have a great day. Speaking of the New York Stock Exchange, folks, what I also have up on the screen is, I've got what the squiggly line is here. It's the McClellan oscillator out there, and the McClellan oscillator. I know David White had spent some time on his shows yesterday. He sent me a comparison chart, which was very, very cool. If you haven't heard David's show, you should tune in between 2 and 3 o'clock out there, because just great information. And what I have is I wasn't comparing historical summation charts. This is the summation index from McClellan. And what it does show on the New York Stock Exchange, it shows that it's pointing down. And, people will talk about the trend as your friend, and oftentimes they'll look into the market and take a look at price. Get your head wrapped around the summation index, because that is the trend. You'll get an earlier jump on where a market is going to turn. And if you can trade in the direction of that trend, folks, your trading will be so much better off out there, and you'll be able to get rid of the noise out there, and it will also give you, another piece of conviction in order to be able to stay in the trade. Right now, I don't have yesterday's data. I did not import yesterday's data yet into this spreadsheet here, but of course I know yesterday's data. I know the advanced declines, so the summation index continued to point down. And with the New York Stock Exchange being such a big breadth of the marketplace out here, this is really the one to pay attention to. From time to time, inside my newsletters, I'll show maybe the S&P 500 summation index or the NDX, but they're quite frankly, and those are good, but they're not anywhere near as good as the breadth of the marketplace. It's better to understand the real breadth of the marketplace, which is the New York Stock Exchange. That's one of the things that you and I, that we get to do here in our work as we do technical analysis work. So I appreciate all those questions by John. Hopefully that all makes sense to you as well. And from my standpoint, what I am not, and clearly am not, is an astrologer. I'm a no-nonsense numbers guy, and I'm just looking for data to plot on a chart and see if there is something there that just simply gives a competitive edge, because what I've learned in life is having a competitive edge, that is a good thing to have out there. And sometimes and that's why I say that taking a look at pattern completion. In this case here, I believe that the cluster that we just went through, the February 4th through February 12th cluster, has more meaning because just simply because the New York Stock Exchange had made a 0.786 retracement. So that's what I mean by a pattern, coming into a retracement level, or an A to B equals CD, or a Gartley buy, sell, butterfly, whatever it is that's out there. Likewise, it's just as important to understand when those areas fail. So I think we've seen a relatively significant high for a number of reasons inside the marketplace here right now. And even with the Dow being up 75 points and the S&P being up 3, that was, you could have expected that after the close last night, just based on having some knowledge of other things in the marketplace out here. So the market being up here, it has, I know that Uncle Ben is out there on the post talking. It doesn't have anything to do with what he's saying. If he wasn't talking, you would still see the market popping up here this morning. Nothing more than a little bit of a relief rally, at least in my opinion. Right now, we've got the Dow up 77, S&P's up 3, gold's up $12, silver joining in up a nickel right now. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 97 right now. S&P is up 6. NASDAQ up 9. Gold here moving above the body of that candle. We'll see how it closes today. The body of the candle from February 20th out there. That would be 1604.20. Gold convincing me that right now we've got a decent bottom in place out here. Just a decent bottom, a temporary decent bottom out here. I think gold will eventually go lower and at least go back and test the lows from back in September of 2000 and what was the exact date out here? Was the September 23rd, 2011 time frame. So it was September 23rd. It was September 26, 2011. My apologies, 1535. But I can see gold here at least maybe moving back into the swing point area, maybe back to about 1660, 1651, somewhere right around there. We do take a look at retracements here off of the most recent swing point high, which would take us back into February 5th out there. That high was 1687. down to the low, put in a few trading sessions to go out at 1554, 1636, 1658 most certainly would be targets for gold if it closes above 1604.50 out there. Gold moving down into the oversold condition out there, but you want to wait and see if you get a close above 1604. Trading inside the bar of this candle, even though it's wide-ranging, is a dangerous thing to do. Or if you're going to take a long trade on it, if gold doesn't close above 1604.20, then you'd want to go ahead and close out the trade. So that's what's going on inside the gold market. If we take a look at some stocks here that are popping and dropping, we were taking a look at Vitamin Shop earlier. Let's go take a look at, well, it was maybe in the first hour. Let's go take a look at one of my favorite places to visit while you're on the road, maybe yours as well. Nothing like pulling into a Cracker Barrel. CBRL is the ticker symbol, up a nice 10% here this morning, up $6.72, and it's got some real volume behind the move. So Cracker Barrel, and I like about Cracker Barrel is, well, first I like their country ham out there. I've had better, that's for sure, in traveling through the South, but Cracker Barrel's country ham is not too shabby out there, and then it's always nice to go check out all that old candy out there, something to pull your teeth out, pull your cavities out. We do take a look at Cracker Barrel here. When it's pulling out, moving over swing point highs, doing it with volume. February 26th today, 469,000 shares so far, taking out a swing point high that has 948,000 shares. Should have the conviction today. Let's put this on a longer-term chart out here as we take a look at Cracker Barrel. This thing has really been on the move off of the lows from 2009. Let's go see what the A to B equals CD pattern that would complete off of the November 28, 2008 low, actually, up to the high that was put in on November 26, 2010. A to B equals CD on this on a long-term chart for the weekly chart of Cracker Barrel. $84.49 is where it looks to be headed to. Let's take a look at the weekly chart. The B point on this had 2.1 million shares. As it got up over it, it did it with 1.9 million shares, so that is pretty darn close out there. Did come back and have some conviction, but it was already over the B point. So really not too badly out here. If we take a look at the weekly chart out right now, you don't see really any bears in place. In fact, even on the individual candles, no bearish candles out there, even on the pullback until you stitch those together. So that's on Cracker Barrel. Let's put the monthly chart out here on the screen. And if we take a look at it, take a look at the monthly chart. It had 5.8 million shares. As it got over that, did it with 5.5 million shares. Folks, thanks so much for being here. Stay tuned. Basil Chapman is up next. Then we do the option hour from 12 to 1. Daryl Martin 1 to 2. David White 2 to 3. Ken Shreve from 3 to 4. The Tom O'Brien Show from 4 to 6. Folks, have a great Tuesday. Look forward to seeing you in the morning. Take care.